Bull or bear? Got a good spin on that one. 1922 peace dollar in AU condition for all my coin nerd friends out there. Comes up ahead too. Oh boy. Well, it comes up a bull, I should say. What's up, folks? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. I've got the live lower Florida Keys cam up, and a little smudge of dirt. Looks like they haven't cleaned it in a little while, but still, beautiful day under the water. It's also a beautiful day here. We're like 70s or something, man. We're having good weather here down in South Florida. I hope you are as well. And so I don't forget, it is the holidays. Happy holidays to all my friends and viewers out there. I really appreciate it. And peace and prosperity to all of you. Let's get into today's video, which is, as you could tell from my title, give me 1 second here, do a little escape there and move into the next, which is what the F happened. And for you folks that have been watching me for years now, we already know what happened. You know who doesn't know what happened is a lot of the new folks out there that are just starting to discover gold and silver and the uses of it and the fact that it's real money, all those other good things. Those are the folks that not quite sure what happened right now, and the folks that watch MSNBC or Bloomberg or CNBC or read Wall Street Journal or listen to the people the talking heads and the writers for these corporate publications. When they talk about gold and silver, they are 99% wrong. Okay, and I know. Oh, they got college degrees. Oh, they're corporate. They're corporate. They got big money. They get paid a lot, folks. You know what really it happened yesterday and happened in the last week or two in the price of gold, silver, and platinum not so much, but gold and silver, the same thing that's happening in this country. That's exactly what it is when exposing a crime is treated as committing a crime. And again, you can cut this part out. This is what I really meant to say right here. The reason prices of gold and silver are down, and the reason that this whole country and probably the whole world is pretty much screwed up, is because we are being ruled by criminals, all right? I know. What does that got to do with the price of gold, silver, and platinum? Well, it's got a lot to do with the price of gold, silver, and platinum, because gold, silver, and platinum prices are derived in the criminal COMEX markets, and then that's my opinion, criminal, because they allow this manipulation to happen in the silver markets and the gold markets by big, powerful players. Fortunately, I have not been thrown in jail, nor has the likes of Ted Butler and all the other smart fellows and ladies out there that have been talking about the factual manipulation of the price of silver, especially silver and gold, and more than likely other commodities too. It's a crooked derivative marketplace. And you know what? This video is actually, instead of me trying to explain in my own words, thankfully, Ted Butler, who explains it much better and understands the situation so much better, put out his recent article, and I'm going to read that. It's going to take a little time to get through it. However, I really think it's important for all you stackers out there, the old stackers even, to kind of get a fresh review of how this manipulation happens and what happens. I mean, and Ted Butler, again, I would pretty much have a debate with most anyone out there, is probably the smartest person in the world when it comes to how the CRIMEX or COMEX markets, and particularly silver market, is heavily manipulated. Not conspiracy, fact, heavily manipulated. And again, I wanted to kind of read this to you because for a couple reasons. He just put it out for the public discourse for other people to read, and I'll show you that website in a second. In case you don't want to hear me read it, there you go. It's on the recent gata.org, and for you stackers out there that are new to my videos, you'll know this is one of the sites that I always tell you to bookmark and read on a weekly basis. If you do that, you'll be smarter than 99% of the people that are on TV and write the articles for Bloomberg and CNBC and Wall Street Journal. Trust me on this. All right, Ted Butler, what happened? That article is free for you to read. Meanwhile, for you folks that want to sit there and fiddle with your coins or whatever, let me read it to you. Here you go. I'm going to get into that right now. Ted Butler, December 6th, what happened? And of course, he's referring to the wild price of riding gold and silver from Friday's near all-time high in gold, to Sunday's evening initial blast to the upside as much as $60, to a sell-off of $120, to where gold closed trading yesterday lower by more than $50 from where it closed on Friday. Silver fared even worse, barely up 50 cents to price high Sunday evening, only to finish down $1.30 from Friday's close and even lower today. Given the unusual price volatility, there were countless stories seeking to explain what happened. And let me kind of pause real quick here. When Ted talks about the countless stories seeking to explain what happened, he's talking about the morons and idiots that have no frickin' clue what's going on in gold, silver, and platinum markets, but they seem to act like experts. And I'm talking about the Wall Street Journal people. I'm talking about Bloomberg people, CNBC, mostly corporate entities or corporate journalism, so to speak, if that's what they want to call it. And that's kind of what Ted is talking about, and the countless stories, given by the same old people. Unfortunately, in our industry, we still have very powerful people in the gold, silver, and platinum industry, and in the mining industry, that either have blinders on, refuse to recognize this, or are just stupid. I'm sorry, I got to say it. But that's not uncommon. Again, we're being ruled by criminals, and usually if you're ruled by criminals, you're surrounded by morons and idiots as well. But I digress. Let me go on here. Please accept this as my explanation. Man, he does it so much better than I. And again, I'm so thankful that he put this out so I can read it to you. I think it's important for you folks to know this. As always, the price volatility was the direct result of paper positioning on COMEX. No more, no less, albeit more extreme than usual. As described in the weekly review, from the price lows of early October, gold had rallied $220 and silver by $4.25 in the November 28th from the latest COT reports, driven higher by the buying of 140,000 net gold contracts, 14 million ounces, and 29,000 silver contracts, 145 million ounces. Again, this is on the Crimex criminal paper derivatives market by the managed money traders. Now, these are the people that the commercial traders, all right, Ted will explain this. Technical funds, that's who managed money traders are. Managed money traders continued managed money buying from November 28th through last Friday, undoubtedly drove gold and silver prices higher into Friday's even higher closing price. Okay, and that was, what was it, last Friday, I think? And as price trend followers, because if you remember, we were like 21 something on Friday, and then all of a sudden Sunday night, boom. But again, that's what I've been, I'm sorry, I kind of digress on this, but that's what I've been talking about. The time that they do this on Sunday nights and week trading, this really is so purely manipulated. And again, if it's done in the silver market to a degree, it is, you got to ask yourself, and the gold markets, is it done in the oil markets? Is it done in the soy markets? Is it done in the wheat markets? Does that mean that we're paying way farther higher prices on wheat and oil, or maybe not enough, okay, in the case of gold and silver? Are those prices so heavily manipulated that that we're getting screwed one way or another, whether the producers are getting screwed or whether the consumers are getting screwed? Oh, it's such a nice day for a bike ride, as you can hear. I think I'll take mine out, but anyway, I'm easily distracted. All right, so let me move along here. As price trend followers, it is natural and customary for the managed money technical fund traders to buy on rising prices. Again, folks, we're going to get into why and how these markets are manipulated. And Ted's first talking about managed money buyers, who are the technical funds. And as he says here, it is natural and customary for the managed money technical funds to buy on rising prices, and they sell on falling prices. No doubt that they bought heavily into Friday's sharp rally in gold. As the close to near all-time high prices is the strongest buy signal a technical fund can get. All right, so they were buying. And remember, these technical fund traders, which is technical funds, manage money, these folks really trade on algorithms and computer programming trading stuff, and their object is to kind of make money between the ups and the downs, and catch a market going up and catch it falling. But typically they buy on the highs. All right. So therefore, it was no surprise that these traders were geared up and in position to buy even more as soon as the COMEX traded opened Sunday evening at 6 p.m. And buy they did, quickly driving gold prices by more than $600. Okay, 21.52 on the high on Sunday night. Sorry about that. I got the timing wrong. So by Sunday night, we had seen an all-time high of 21.52. And I'm not quite sure at what time that started to fall apart. It was probably the next morning. I didn't look at the 24-hour chart. And Ted goes on to say, of course, what the managed money traders were buying hand over fist in early trading Sunday evening wasn't actual gold or silver. Well, we all know this. But were COMEX future contracts and being derivative contracts. There had to be an equal number of derivative contracts sold. This is not real gold and silver. These are contracts, paper derivatives. Remember the things that caused us to go nearly belly up in 2008. So I digress there again. To satisfy the managed money buying, those sellers were the principal counterparties of the managed money traders, are the commercials, the commercial banks, the big, and Ted talks about the 4 to 8 big commercial banks. All right, since the one category of commercials, the Raptors, this gets a little deep and heavy, folks. You kind of got to know who he's talking about. And this is what makes it hard for most people to wrap their heads around this. Raptors, managed money traders, commercials, long, shorts, contracts. But bear with me here. Of commercial, the Raptors were holding a net long position down to only 7,400 net long contracts on November 28th. It is simple to conclude that the 20,000 or more new long contracts purchased in early Sunday evening trading by the managed money traders were new short sales by the commercial as a whole. All right. Early Sunday evening, before prices begin to fall, I would estimate that the managed money buying since early October had reached at least 160,000 net gold contracts, 16 million ounces. That equals 16 million ounces. 16 million ounces, and the total commercial net short position had reached at least 240,000 contracts, which equals 24 million ounces. With practically all those short contracts held just by 8 of the largest commercial shorts, commercial traders, the people that we don't allege, people that we don't falsely accuse of manipulating markets, but the people that are manipulating markets are these 8 large commercial shorts. The largest levels in a year and a half where these short contracts were or where the large commercials came in and monkey hammered this market down more or less. Okay, Ted says at this point, the question of whether we are going into Izzy's full pants down premise of commercials failing to contain prices for the first time ever, and then to begin buying back shorts, setting prices even more sharply and uncontrollably higher, or whether the commercials could turn prices back down, became critical. It quickly became obvious that the commercials were still in full and manipulative control, and soon it was the managed money traders in panic and full retreat yet again. This is a rinse and repeat operation that's been happening for years. Even some companies like J.P. Morgan have been caught red-handed, paid $920 million in fines, folks, for doing this. The Department of Justice withheld any criminal charges, but fined him almost $1 billion. And you know why J.P. Morgan didn't mind paying that almost $1 billion in fines? Because first off, they were lucky they didn't go to jail. The second thing is they probably made $5 billion. It was just a calculated, hey, give them back $1 billion. We made $5 billion screwing the gold and silver markets. Okay, let me move on to what Ted's talking about here. So Ted says, I'm sticking to the price action in gold, even though silver was manhandled by the commercials even more to the downside, as befitting it being the most manipulated market in the world is silver. I can assure you that an intentional commercial inducing of the managed money traders to buy the maximum number of COMEX gold and silver contracts right up to the peak of prices early Sunday evening, and the subsequent pulling of the plug on prices to then induce managed money selling is the full and complete explanation for the wild price actions that we witness. That's a mouthful, what I said. And again, unless you understand, I have a hard time wrapping my head around, short positions, long positions, managed money trading, commercials, and reading COT reports for sure. All right, but it has nothing to do. And Ted basically, well, here we go. He said it right here. Gosh darn, I should have read a little further. As Ted says, and as I've been saying for a couple years now, the price fall has nothing to do with capitulation. Now, this is what I'm telling you. It has nothing to do with capitulation. It has nothing to do with manufacturers saying, we don't need silver anymore. investors saying we don't want to buy silver anymore, and everybody's selling silver in the market, and a huge amount of mining silver coming onto the market, and a huge amount of scrap. None of those true anyway. There's no scrap coming to the market hardly. There's no mining hardly except for byproducts from copper. There's no physical capitulation with investors in silver, and again, that's what Ted's talking about here. It had nothing to do with the dollar. And this is what you were told by your corporate news jerk-offs, all right? The so-called experts. It has nothing to do with the dollars. The price of gold and silver following has nothing to do with the price of the dollar, all right, folks? Interest rates, inflation, or the deep state's plan to enslave us all, the 49ers trashing the Eagles. I think that's kind of funny. It's what the crooked and collusive commercials always do. I highlighted this little section. You need to really read it and get that into your mind, especially you new guys out there, you new gals and guys out there. This price fall had nothing to do with the dollar, interest rates, inflation, or the deep state's plan to enslave us all. It's what the crooked and collusive COMEX commercials always do. All right, let that sink in for a little bit. Next time you listening to someone talking about, well, interest rates are up and yields are up, and it's much better going into treasuries at 5% than buying gold. Bullshit, bullshit, bullshit. Because what do you get for those 5% treasuries? They pay you back in deflated dollars. All right, but I digress again. I'm adding my own little comments here too, as you can tell if you're reading along with me. Ted says, let me get a sip here of coffee real quick. Boy, could be a long video again. Backing up what I contend is the only true version of what actually happened is the sharp drop in total open interest in both gold and silver when all the dust settled. Both on Monday and yesterday, total open interest in both CRIMEX, let's call it CRIMEX, I'm tired of calling it COMEX. CRIMEX gold and silver contracted sharply from the close of trading on Friday, with the total gold open interest falling by 22,000 contracts and silver by 5,700 contracts from Friday's close. What this means is that every one of the, what I would estimate to have been 20,000 plus new gold contracts bought by managed money traders early Sunday evening and sold short by the commercials were all liquidated or closed out, with losses to the managed money traders and profits to the commercials as much as about $100 or $200 million in total. All right. Not only were the new buys early Sunday evening so costly to the managed money traders and profitable to the commercials, since the price declines persisted into Tuesday, there can be no doubt additional losses were taken by the managed money traders, which went on to sell long positions established last week. Otherwise, there wouldn't have been such sharp declines in total open interest Monday and yesterday. Therefore, the only explanation of what happened, what the heck happened, or what the F happened, from the close of, I added that, from the close of trading on Friday through yesterday's close, and I think he's talking about last Monday, was the highly deliberate positioning of futures contracts on the COMEX. It's the same old shit, folks, in which the collusive commercials once again tricked the managed money traders into first buying high, only then to sell lower a short while later. While some may be quick to credit the commercials as being astute traders, who's that? Oh yeah, the some would probably be your CNBC, your Wall Street Journal, and your Bloomberg experts. All right, okay, here I go. While some may be quick to credit the commercials being astute traders, always selling high and then buying low, a slightly deeper review would reveal that this is at the core of the long-term price manipulation on the COMEX and gold, but particularly in silver, and that is illegal under U.S. commodity law. And Ted's going to explain it right here. He says, please let me explain. Please do, Ted. Since the managed money traders are openly acknowledged as being speculators, and their excessive buying and selling is what causes prices to rise and fall, it's easy to cast their pronounced buying and then selling these past few days as excessive speculation, which is clearly against U.S. commodity law and the regulators. Both the federal regulators, CFTC, I'm going to add my own comment here. CFTC, they're worthless as tits on a log, right? Okay, let me continue. And the designated industry self-regulator, the CME group, CRIMEX, more or less, they're the fox guarding the hen house, which have been beyond negligent in not cracking down on excessive speculation by the managed money traders, all right? That's it in a nutshell, folks, more or less. And Ted goes on to say the reason for the regulatory negligence negligence in the case of the CFTCs, because to come out now and label the speculative trading by the managed money traders as excessive after 4 decades of not doing anything, that's my comment, would make the agency look really bad, as they should. In the case of the CME Group, excessive speculation by the managed money traders bring great profits to the organization. No explanation is required why they look the other way, and that's exactly true. COMEX, the CME, is making a fortune off all these manipulative trades. They get a piece of every trade that's done. Why would they try to nip it in the bud? After all, isn't that what the CFTC's job is? And the funny thing is the CFTC is made up of a board of attorneys. They're all attorneys, folks, and they refuse to respond. They don't do anything. They're worthless. And the fact is, most of those attorneys that are currently working, Benham and those other folks or whatever, who they are, the attorneys that are supposed to be guarding us against these manipulated trades, you know what's going to happen? They're going to do nothing like they always do. Then they're going to go work for the CME Group or some other government agency. That's what they do, folks. That's what these attorneys do that work on the CFTC. They do nothing. In fact, they're there to protect the COMEX, and they're there to protect CRIMEX. The CFTC is there to protect the CRIMEX market and all that criminal enterprise. The CFTC is there to protect the big banks that monkey hammer these prices down, and the managed money traders who are just as manipulative by the huge speculation that they're doing, which is illegal. And like I said, the problem is when the people that are supposed to enforce these rules and regulations and laws don't. It is simply a fact that you are being ruled by criminals. The exact premise of the beginning of my video. Okay, let me go on to what Ted talks about here. But as clear as the managed money trading being excessive speculation may be, it's what the commercials are doing that is even worse. Although many still mistakenly believe that the commercials, who are banks and financial institutions, are somehow legitimately hedging in their counterparty positioning against the managed money traders, that's nonsense, all right, Ted says, and I'm going to put my own word in. That's bullshit, folks. Okay, and Ted says the truth is that the commercials are speculating every bit as much. He uses a little nicer words than I do, as we know. Okay, and the commercials are speculating even more, folks. This last week or two, it's beyond speculation. I mean, it's just like purely manipulative speculation. And the commercials sell when the managed money traders buy, and buy when the managed money traders sell. To make hedging has nothing to do with it, and that's an important comment that he makes right here. These folks aren't hedging, folks. They're manipulating markets, and they're it's just pure criminal activity. And where do you go? Where do you go with this? There's not much you can do, because again, the people that are supposed to watch over this criminal behavior, the CFTC, are a bunch of crooks themselves. Oh man, I said it. All right, there we go. I will only do it once today. And the people they're beholden to, which is the Department of Agriculture, is a bunch of congressmen that have IQs below 80. Trust me, I know who they are. Below 80, 90 maybe. I'll give them 90. And hedging has nothing to do with this. Now, let me mention something to you. The CFTC, again, works for, or not works for, but is the Department of Agriculture, and some congressmen that sit on the Department of Agriculture board are in charge of the CFTC. And the congressmen that are in charge of the CFTC, I mean, they really, I'm telling you, most of them have low IQs. I don't want to say who, what, but you can tell by everything they've said, they've done, and their background. Okay, so this is sub IQ people. This is such a complicated market right here. I mean, I've been doing this a long time. I have a hard time wrapping my head around long shorts, COT reports. You know, thank God for people like Ted Butler. So do you really think that sub-IQ Congress people are going to get reports from the CFTC and understand anything that they're saying? And no, they're not, because they're stupid. And they are, folks. I'm just saying they're not right. We have stupid congressmen. We have stupid senators. We really elect stupid people. Again, criminal. It's criminal. And we are ruled by criminals, okay? So don't expect any help from the CFTC or any government agencies whatsoever, okay? Because, again, IQ and criminals rule that roost, all right? So where do we go from here? I mean, what protects us from these? Well, we're going to get into that in a moment here as well. Ted says both the managed money traders and the commercials are engaged in excessive speculation strictly against the law, with greater blame having to be leveled against the commercials because they're clearly tricking the managed money traders into in and out of positions and not vice versa. All the while, the CFTC and the CME group pretend all is well. Pretend all is well. All isn't well, as the real losers are everyone outside the private COMEX betting game, which have to live with the artificial prices determined on COMEX, particularly in silver. And Ted mentions here, none of this is new, and I don't intend to spend the rest of this article further describing just what happened. Clearly, the collusive commercials just won a significant price battle and may very well succeed in further downside flush below all the key moving averages. It's not over yet, folks, trust me. That's not a prediction, just an observation based on what Ted's and most of us have witnessed over the past 40 years. Regardless, I want to look ahead and describe what I see as inevitable in silver and the price war that has raged for decades. Conditions in the physical silver market. All right, folks, this is why you should not despair, at least too much, okay? And that, in my opinion, you be a buyer and a holder at these stupid low prices, because you're going to wake up and you're going to have an oh crap moment. And let me finish what Ted's talking about here. And why, all right? Why our price is going to go up, especially in light of the fact that we know that we're being ruled by criminals and crooks, especially in the silver market, CRIMEX market, and the CFTC, all right? Why? Well, here we go. Conditions in the physical silver market has continued to deepen, and that alone assures that the outcome of the price war as being sharply higher prices. While it is undeniable that COMEX paper positioning has set the prices for 40 years, it is the deepening physical silver shortage that will determine prices in the end. And from everything I see, the end can't be that far away. The 40-year-old price suppression of silvers has so altered demand and supply that even the Silver Institute now acknowledges that the entire, get this folks, and I don't even trust the numbers the Silver Institute gives us. I think they overblow them to begin with, overstate them, all right? And they're saying that the entire world mine supply is needed for the industrial investment demand and then some, leaving no new mine supply available for investment. This is a circumstance unprecedented in modern history, folks. Over the past 3 years, the growing physical shortage in silver, which means more demand than supply, has resulted in a dramatic reduction in the recorded world inventories. Each week, I highlight the shrinkage in the two largest stockpiles of recorded silver inventories in the world, the COMEX warehouse and the SLV, which is the ETF, as most of you guys know. He goes into some details here, and how much both the SLV and the CRIMEX CME group's criminal market have declined in physical silver. And I'm going to cut through that because, again, it's a lot of numbers and stuff. If you folks out there that understand how these markets and contracts work, I highly recommend that you reread this article and go into the details, especially if you can understand them. All right. Clearly, the rate of decline in the world recorded silver inventories has slowed dramatically this year, despite what the Silver Institute describes as perhaps the tightest supply-demand situation ever in silver, with other reports from them pointing to a sharply growing industrial demand for silver as far as the eye can see. What could possibly explain the sharp reduction in the rate of decline in the level of recorded silver inventories in the face of what can only be termed ever greater industrial demand and stagnant to shrinking supply? That's the answer that we got here. And Ted says the answer to this question, okay, we get another answer, is behind what led Ted to speculate earlier this year that the combined silver inventories in COMEX and SLV, close to 750 million ounces, had reached bedrock bottom levels, because it was likely those remaining inventories were owned by investors who were unlikely to sell at current or lower prices. Ted says he was both right and wrong. Wrong that we did fall another 50 million ounces, but right that the decline would be sharply reduced. And you know what? I could get into some more of this, but I think that we'd be here for a little while. And let me just see if I can kind of comment on some other things. Let's see. Well, he does say at the bottom, admit the real sense of disappointment by the comments of those analysts that I do believe understand what I've described, but continue to refuse to acknowledge the blatant manipulation of the essence of COMEX trading. And who Ted Butler's talking about here, there's a lot of YouTubers and there's a lot of guys out there, so-called experts, and some of them do have good expertise, and that still have not come around to the fact that these markets, it has nothing to do with interest rates or charts or anything like this. It has everything to do with manipulative criminal trading in the Crimex derivative paper markets. All right, I did it. I explained it to you. And again, you can find this article. This is, I pay a subscription to Ted's articles here, Butler Research. You can do it as well. Highly recommended if you buy and sell a lot of silver, if you're interested in this type of thing. I especially recommend it if you're one of those YouTube talking heads out there, or one of you folks out there that write reports about gold and silver, that you read his stuff, if you haven't been. And again, you can get it for free here at gata.org. All right, let's just take a look at what prices were on yesterday's close. This is a Saturday video. I want to just kind of do a wrap up for the week. Above 2,000, above that $23 mark, and platinum in the green right there. Does that mean, is that my tell that I've been watching for the last year that's been mostly right, that we're going to see higher prices on Sunday night or Monday? Perhaps. But, and the coin even said that that's a possibility. Oh, we got a bear, didn't we? But this is where we sit right now, folks. And the cool thing about these prices is that the prices are cheap. Silver at 23 bucks is just cheap, especially in this environment, given the fact that silver is like half its all-time high, and gold just broke its all-time high for the 4th or 5th time. All right, I've forgotten so many times of recent. Silver, only twice in my lifetime, and yours, if you're old enough. So what's nice about these prices that we're looking at? Well, it's great if you're a buyer still, because we've got a combination of two different things here. We've got super low gold and silver prices, and we've got super low premiums. Premiums have dropped dramatically on silver and gold products, okay? It's particularly silver products. I mean, what are the best deals out there? I'm going to get into that right now, and we're going to kind of, well, hang on. Before I get into best deals, take a look at these silver charts. For the last weeks, or for the weeks that I saw gold and silver price going up, it seemed to be doing it in the evening markets, particularly during this time. Maybe it is Chinese buying that was driving the price of gold and silver up in international buying. Typically, you see the prices get monkey hammered in the after-hour markets, usually during London and the New York Crimex opening. But take a look this week on silver, bang, right in the criminal Crimex market right there. There you go. There's all your criminal bankers driving the price down. And same thing with the price of gold. And we've seen this. Look, and you know what's weird too? Gold and silver almost identical. So you know what, folks? Hand in hand, they're doing this. They really are. There's nothing organic or natural about this chart. There's nothing organic or natural about the price of gold and silver being as low as it is. But take advantage of it. Trust me on this. You will look back on these prices one day, just like we will look back on $1,000 gold and $500 gold. You're going to look back on $23 silver and say, wow, man, I wish I had bought more of it. At least that's my opinion. And again, prices are cheap. Premiums are cheap. Constitutional silver you can pick up for spot plus 2 1/4 or less, okay? You know, in larger quantities, probably less than that. 100-ounce bars are like, in small quantities, probably like $1.65 over. You know, I mean, how cheap is that? That's as cheap as I've seen this stuff. $1.80 on 1-ounce rounds. $1.75 on 10-ounce bars. Kilo bars, $1.70 over spot. I haven't seen these premiums this cheap in 2 or 3 years. And why are the premiums cheap? Well, because sales have fallen off a cliff for silver and gold products for the most part. And I'll tell you exactly why, because most folks are not savvy to what you and I just talked about, all right, about the criminal Crimex markets and how this market works. Most folks aren't savvy with the fact that this is bargain basement prices that we're looking at right now, and that the manipulation to the downside is giving great opportunity to buy these products on the cheap. So we've got a couple things going on here. Gold and silver buyers, especially people in the know, are bought in already. It's been 2 or 3 years, even longer. I'm going to say that our market really started in 2016 when we started selling a lot more gold and silver. It was quiet after 2012 up to 16, and then it's just a trajectory upward as along with the price of gold and silver. And it just recently, kind of slowed down. Everything, all the gold, silver buyers out there are slowed down right now. Don't let anyone tell you anything different. Our business is slowed down dramatically, and again, we still do well. And thankfully, I don't tip all on gold, silver, and platinum to make a living. We also do rare coins and paper money and collectibles and jewelry and artwork. I have an estate business that does that. If I had to rely on gold, silver, and platinum sales alone for the last year or two, I'd be living under a bridge probably. So I feel for some of these big online companies, by the way. They got to be hurting or something, and just sales have laid off dramatically. But again, I think that the retail buyers of gold, silver, and platinum we're such a small community, folks. You know, I'm going to get a lot of folks out there, silver shortage. We're going to see it in the comment section. You watch. Silver shortage. APMEX, SD, JM have plenty of silver. My local dealer, including me, has plenty of silver. Has more silver on hand than they've ever had. And that's true. It is very true. But what they don't realize is that the retail silver market, what I have on my stock and what APMEX and SD and JM have, and what the other online sellers, and if you took all the wholesalers in the United States and you took all the retail investors in gold and silver and you combined all our gold and silver together, you wouldn't even hold a candle to these contracts that Ted is talking about. 200 million ounces, 500 million. So folks, there you go. There's your explanation without me beating this over the head 100 times. But premiums are really cheap, as I just mentioned, on silver products. What to stay away from? I'd still stay away from Silver Eagles, although they're priced more reasonably at spot plus $5 thereabouts. And by the way, I do have them for sale for spot plus $5. You know what else I have for sale? I have some 1/10 ounce platinum products that I can sell you for spot, melt plus $25. That's like impossible to find while they last, but you'd have to call me or come in to see what's available right now, where that product is selling out pretty fast. Silver Eagles, again, spot plus $5. But I wouldn't buy Silver Eagles at plus $5. I'd buy 1 ounce rounds at plus $1.80. How the heck do you beat that? Or kilos at $1.70 over versus $4 over. I'm sorry, $5 over spot. My apology. Gold, even the gold premiums have dropped somewhat a little bit. Let me kind of Eagles. Sorry about that. Missed the button. Eagles are around 115 over. They were 123, 125 over. So the premiums on Eagles have come down. Maple Leafs are $80 over. Krugerrands, my God, the price of Krugerrands, I can't believe right now. I don't know how long it's going to last, but you can get Krugerrands right now for, I'm not even going to advise people buying gold bars because they're the same price as Krugerrand. I'd rather own a Krugerrand at spot plus $70. How the hell do you beat that? So folks, there's a good side to this, these lower prices that we're seeing. Not a good side if you're sitting heavily in gold and silver and you've been, we're anxiously, digging in our heels and getting ready to charge the starting line here for that oh shit moment we're going to have. I mean, I wanted it yesterday. I wanted it a year ago. But again, this. With these lower prices, what is the advantage of having these lower prices? The advantage is that you get to buy these prices at a lower, you get to buy gold, silver, and platinum at a much lower price. And in my opinion, silver just stupid cheap. I really believe that. And premiums are super cheap. By the way, if you're looking to buy gold, silver, and platinum, here goes my advertising. We advertise to beat APMEX, SD, and JM Bullion for their common recognizable products. And what I'm really saying by that is not the overpriced shit. And APMEX, SD, and JM Bullion, they're good companies, great companies actually. And but if you want to be competitive, who do you want to beat? You want to beat great companies, and that's what we do at Commercial Rare Coins and Precious Metals. So if you're looking to buy any types of gold, silver, and platinum, we'll beat APMEX, SD, JM Bullion, and most of the online sellers. Can't say everyone. But the big 800-pound gorillas will beat, and we'll also beat the local folks. So if you live in South Florida, definitely make sure you come by our store, brick and mortar, 10 to 4. We don't have a website that we sell on. I don't have an extra $2 million that I'm going to build a new website and try to compete with APMEX, SD, and JM. But if you live in South Florida, we're a much better deal than they are. Plus, you get to talk to a real person, all right? And that's important. Let me tell you, that's important. Again, we'll also beat the locals. There's some fine locals around here. Very few south of Palm Beach County, but except me. All right, I know that was a cheap blow. But Not a lot of shops out there anyway. A lot of shops are closed. It's hard to, especially if you're just doing bullion only. I mean, the last year or two. Remember when you saw the cash for gold businesses everywhere? Well, they're all gone. Why? Because that market disappeared. All right, I could go off into a whole new topic with that, folks, but I'm not going to. Where are we going from here? We did best deals. Didn't show you the best deal logo, though. My last video basically wasn't 2040 gold. It was a video on counterfeiting. And let me just kind of show you that video. One of my lowest view videos ever, and I swear I thought it was my best video because I gave so much great information on it. Fake and counterfeit gold and silver in ways you can test. Take a look at those views. Woohoo, dismal for 5 days. You get 22K for something like that. Silver buying basics. Well, that was a good video as well. But 2040 gold. And if you want to hang on with me, folks, some of you remember I've always.
Our pillow in the shape of a cube?
I'll tell you.
Okay, I'm stuck on advertising. There we go. Skip. See, I'm too cheap to pay for paid YouTube. Here we go. I usually, in the past, have always answered the comments, people in the comments section. I'm going to do that today. There's a lot of comments in this particular 35 comments. Well, a lot for me. And I'd like to acknowledge everybody here. Again, this is something I haven't done in a little while just because I've been busy doing different types of videos. Let's go, Matthew. What's going on? Tracy, don't get to hear from you too much as well. Thanks for watching. The moon, to the moon. Eric, what's going on? U.S. debt clock site. Someone said that was down and not working. It doesn't show what. You kind of lost me there. But how's it going, Wayne? Ronnie, 2.803. Silver people are getting ahead of themselves with this wish. Not sure which wish you're talking about. Is the wish for higher prices? Well, that's not a wish, sir. That's inevitable. It's not a matter of if. It's a matter of when. Thanks for watching, Ronnie. Michael Matthews, what's up? You just reminded me I needed to take a sip of coffee. What's up with the World Debt Clock site? Not quite sure. The COMEX is a Ponzi scheme with the U.S. dollar, just like a but Russian dolls are more reliable. Thank you, Anonymous Andy. Harry says, I think adding to precious metals hysteria should be avoided. People consider it. There is no hysteria right now, Harry. It's just absolutely been dead quiet as far as retail sales go. And again, that'll change real quickly when things start to move. What's my opinion? I think if we start to see a substantial move above that 2100 level that we hit, and it continues for a week or two after that in a slow fashion. What I'm looking for is I'm looking for silver to go up 50 cents, down 20 cents, 30 cents, up another 50 cents, down another 10 cents. That kind of moves is what we're looking for in silver, in my opinion, when I think that the manipulation is finally over. I don't think it's going to be an overnight thing. Maybe it will real quickly, but I think it'll steady off and slowly tick its way up. And I think the same thing with gold. And as far as what's going to do better, well, I think you're more likely to, in a sooner period to see the price of silver double than the price of gold. But again, that's just my opinion. Silver back to 23 by Friday. Damn, nice call. But I kind of thought the same thing myself. But I'm done trying to pick specific numbers and time frames because sometimes I look like a hero, and then there's a few times I look like a zero. I mean, it's just you can never underestimate the criminals in the CRIMEX market, and you just don't know what they're going to do. So it's hard. If you're using charts, you're going to get screwed. If you're using your gut feeling, you're going to get screwed. But if you had an insight and you had a picture of what the criminals and CRIMEX are going to do, then you know. And this is kind of why we knew prices were going to go back down, because it has nothing to do with interest rates and stuff. Here we go, some more and more and more. Yes, same old shit, I bet, yeah. It's 25.28 for silver. That was the when I did the video 10 days ago. Great information. Thank you very much. Hammer time. Yes, it was. We did get it. 10-foil ninja. Why don't billionaires take the COMEX, take down the COMEX, buying all the silver they have? Well, that happened. The Hunt brothers tried to do that. The Hunt brothers tried to take down COMEX, or basically tried to get COMEX, not default, but they made a ton of money. And a lot of people think COMEX, the Hunt brothers were doing illegal stuff. No, folks. That was the narrative that was painted back then. The Hunt brothers did everything by the book. Everything. The Hunt brothers just got screwed by the CRIMEX when the CRIMEX understood that their big commercials and themselves were going to be screwed or possibly default. And then they screwed the Hunt brothers. So the real criminals with the Hunt brothers silver prices at $50 was not the Hunt brothers. It was COMEX. It was the regulators. They were the real criminals, and they are even worse today, folks. We're being ruled by criminals. That's a fact. Guy says, Guy Toe, Brian, when you go fishing, do you find silver coins in your fish catch? Not yet, sir, and I'm really praying for gold coins instead, so really appreciate it. No, never found silver in there. You should try fishing sometime, even if you don't find a silver coin. It's a very fun thing and relaxing to do. I also heard Jesus was Jesus a fisherman? No, he's a fisherman for souls, I think it was. All right, Pinball Junkie says gold hit an all-time 28.7. Can rise probably 2,100 by the end of the year. Well, went through that 2,100 on Sunday night, obviously. Thanks, Pinball Junkie. Pinball, man, there's something you don't see often anymore. Man, my father loved that game too. Charles Wilson says, glad you're back, and I'm glad you're back too, Charles. I'm glad I got a chance to read some of the comments here. Well, I read them all the time. Even the ones I don't answer, I read, even if I don't read them online. Prices were retrenched slightly in the rise and fall in economic reports. Yes and no. They slightly rise and fall, not on economic reports, but simply by manipulation. But thanks, David. Appreciate that. I think you got part of that right. I'm still buying silver weight. My kids will get it when I die. Wealth transfer. Man, Jeremy. I know your kids will get it, but I heard a saying a long time ago that I think it's smart. Keep your kids long on hugs and short on pocket change, and you'll make them better people. Well, that's what my father did. Long on hug. Well, not so much on the hugs. He was a tough guy, but short on pocket change. Sure helped me. And spend some of it, man. Go have some fun, dude. Where the heck have you been, Brian? Was going to send a dog out to you buried in work. I am buried in work, Chris. So I got too many jobs. I thought as you get older, you're supposed to wind things down and have less work to do, but it doesn't seem the case for me. Silver won't run until Jamie Dimon says it will. Demon, that's what I call him, the demon. He controls the silver market with trillions of dollars his bank owns. To some degree, that's true. But again, the big commercials, Jamie Dimon's company is not involved. JP is not involved. Is not one of the big shorts out there right now. Actually, they've been banned from trading since they got caught cheating the market out of billions and billions. Okay, so they're really, but they're behind the scenes creating all this. So you're right in that manner. If once a week, hey, thank you, Joe. Appreciate that. Always nice to hear from you as well. As far as silver's concerned, we are at a new floor. I'll buy some more Friday. I think that's a good assumption that we are at a new floor. That really is, in my opinion, as well. I don't think that we're going to see sub $20 silver. I'd be extremely surprised, and if it does, I'm loading up the frickin' truck. Jeff Keller's happy holidays to all you folks too. You too, Russell. Jeff says, I agree, silver's a better buy right now. Even my last purchase was a 110 Panda. Number 2, thumbs up. Commodities have got to be the only thing in the world that are determined by someone other than. That's a great comment. Thank you, Silverliner. And by the way, I hope you're feeling well. Commodities has got to be silver commodity has got the only world that are determined by someone other than the manufacturer. And it's not determined by supply and demand. It's determined by a bunch of crooks in the Crimex markets. Love your videos. Thank you, Michael. Appreciate that as well. Love you guys' comments and your really nice comments too. A lot of you are really cool. I appreciate it. The lighthouse may have a Fresnel lens. Yeah, we were talking about the lighthouse in this video, and it is a Fresnel lens. Thanks for bringing that up. And yeah, you're right. I kind of screwed up on the math on the 1/10 platinums there, but hey, sorry about that. We'll pass the all-time high with gold. Yeah, absolutely. And we did. We did after this video. We absolutely did. We hit 2,100, so you nailed it, my friend. All right, folks, it was a long one. One of the last, most recent long ones I've done in a while, except for my counterfeit video, which is well over an hour. In fact, someone said I should, who was it, Joe? Someone said I should win an Academy Award for that one. Man, it was my favorite video, too, as far as just teaching guys how to detect counterfeits. All right, that's it, folks. If you're looking to buy gold, here, let me first say, think for yourself and question authority. This has made me the smart guy that I am today, I think. And if you're looking to buy gold, silver, and platinum in any quantities, give us a call at Commercial Rare Coins and Precious Metals. We have a brick and mortar store here in Florida. We're open 10 to 4 Mondays through Fridays. Why are we better than Atmex, SD, and JM Bullion? Because first, I'll beat their prices, and we'll beat their service. And you'll get to see a real smiling face behind the counter that'll give you good advice, all right? And there's nothing wrong with Atmex, SD, and JM. Again, my goal is, if I'm going to have a successful business, who do I want to beat? Well, I want to beat the 800-pound gorillas that are running good businesses, and that's what I do. And I also want to beat the locals here in South Florida. So if you're South Florida, I will beat the local dealers down here as well. So give us a call or come in. If you don't live in my area, my first recommendation is find yourself a good local dealer. And if you can't find yourself a good local dealer, give us a call and we'll see what we can help you out with. Hey folks, like to thank you all for watching. Make sure you hit that like and subscribe button, and I will happy holidays, and I will talk to you this week. Bye now.